so there's few new people here, so I just want to do a briefing introduction on what we do. Let me share my screen first. Just want to do a brief introduction on what we do here. That's cool. Euro Aussie just hit it on my sell zone. We're gonna go through this in a minute. So basically, what I do every Tuesday is I go through the economic calendar and show you guys the potential news that can happen. So it can be, you know, any macro fundamental stuff, and then after what are the pairs we're going to be looking at to trade those economic news, and what are my expectations for those economic news, right? So the most popular one is the economic calendar from investing.com, and of course we do have other you know, other ones, but it's up to you which one do you want to use. ACY Securities has a sister company called FinLogix. So if you type FinLogix on Google, finlogix.com, it is a tech company, more, you know, towards the market, the financial market, and it works as same as sort of investing.com. So we can see here by ACY Securities. So it's a sister company, very new, but very, very good on what they're doing already. So that's a whole team behind it. And we do have economic calendar on FinLogix as well, same as charting. Okay, so we do have charts on FinLogix that you can use. You can publish your ideas there, sort of like TradingView. You know, you can, whatever you want to do, drawing, indicators, you know, you can add all of those kinds of stuff, and click on publish, and then of course you need to register. Just not gonna log in on my account, but that's pretty much it. So let's just come back here and let's start it. Okay, and then of course I have Thursday's webinar as well. So if you go to acy.com, you can have a look on here, learn, and then you have webinars and seminars. I don't know if it's going to show it because no, you can't trade on it for now. Okay, for now, but there are coming few things that will allow them, ACY Securities traders to trade on FinLogix. Therefore, it will be linked. But this is in the future. I don't have, you know, I'm just a trader there. I'm just an analyst, so I don't have much to talk about on the how can I say that, on the FinLogix side, because I don't work on FinLogix. FinLogix is another company, so therefore I'm not too much into it. But I know that they are building up a web trading platform that will be sort of like FinLogix, where you can be trading on the online charts. Okay, so just answering your question, Casey, not for now, but soon. And AH500 YIP. Need to register in FinLogix. Yes, you do need to register. So how you do is you just, you know, go to FinLogix where we are at this moment, go to sign up, and then you go and email or phone number, either choices you want to do, and then you can sign up for it. It's free, okay? Nothing, $0. The only thing that it's paid is, of course, if you do have a business and you know, like a financial market, stock market business, and you want to use FinLogix widgets for your website, like if you have a fund management sort of stuffs, you know, or if you have a sort of the same platform, talk news about talking trading and those types of things, we do, you know, FinLogix do provide this as well. As widgets. So, you know, if you go to a website, let's say investing.com, you can see that most probably they will have you know, those things here, see, like pricing. So we have real-time pricing. So this is what, oopsie, where is it? This is what FinLogix can offer as well. So if you want this on the top of the page, you can have it. You know, if you want a custom real-time chart, you can have it as well. Signal symbol widget, you can have as well. All of the things that are here, you can have. So this is the one that investing.com has. Well, not this one, not FinLogix ones, but fairly similar. Okay, and of course, you can use as a trader as well. You know, just analyzing charts and having a go. Sometimes MetaTrader is a little bit, you know, you don't want to trade on MetaTrader. You just want to have a look on here. You can go for it. All right, just play around and see what you think. I'm gonna send a link here on the chat. Just a second. Just a second. Control C. Where's the chat? The chat is here. Okay, cool. So that's the link. You guys can go there and play around with it. But as I was saying, thanks everyone for coming. We do have a few other nice names here that I haven't seen it. So let's just start it. Let me put it here on my calendar. Okay, so yesterday we didn't have much happening. Okay, as you guys know, it's lunar year. So most probably, you know, it's not only China that does celebrate lunar year. There are other countries that do celebrate lunar year as well, and therefore it will be holiday on those countries. Okay, so like Singapore, Hong Kong, South Korea, and so on. So most probably the Asia session for this week will be a little bit slow, just because of that. All right, but there are plenty of opportunities, and when it comes to trading, we don't want to only trade for, you know, a day or so. This is my approach. My approach is more towards, you know, I'm holding few positions, is 2 for a month, 2 weeks, and so on, because I want the move to happen. All right, so not much happening yesterday. On Monday, today, Tuesday, we did have some stuff for PPI on Japan, but it's a very low impact news. So we did have a positive and we did have a negative one about the consensus. So we can see here, if I get my pen, just a second, here, oopsie. Well, you can't see white, right? Let me get black. Okay. So here at 10:50 this morning, we had Japan PPI 0.2 above consensus, but this one was 0.0 below consensus of 0.1%. Okay, and very bad from the previous one. So that's not good. Hopefully, you know, Japan can have some good opportunities there, and definitely will throughout the year. I want to talk about Japan as well, but not now. All right, so coming down, we do have some things interesting happening tomorrow. Okay, well, it's going to be tomorrow for me, but I don't know, maybe I see here that we have completely different time zones, so you just need to check on your time zone. You can do that on FinLogix as well. You can just check on you can just change the time zone, as I did here on investing.com. So this is the big one for this week. Okay, this is the big one for this week, and this is what I will be mostly of the time talking about. We're going to have core CPI and we're going to have CPI for US. Okay, if we look at the consensus, right, I don't know how new you guys are to trading. Actually, send in the chat for me so I can sort of understand how long have you guys been trading for. Have you been trading for 6 months? Have you been trading for a month? Have you just started? Have you been trading for a few years, you know, a couple years, 5 years or so? Just put it on the comments that I will look at my screen here. So tomorrow and Wednesday, in a few hours, actually, we're going to have, for me, midnight 30, we're going to have CPI from US. All right. CPI is a measure of inflation to the consumer side of aspect. Okay, so basically when you want to buy a milk, or when you want to buy bread, or when you want to buy something, there are inflation, you know. So let's say 1 year ago, the milk price was costing you $1, right? Whatever. And now it's costing $1.25. So that's a 0.25% inflation there that happened on the milk price. Of course, milk, it's a very, very big variable. It's not only inflation that goes into it. You do have supply, you do have demand. You know, you do have all the aspects behind it, not only inflation that can increase or decrease milk prices. Same as the gas price, right? When you go put gas on your car, it's not because inflation went up that the petrol price went up as well. The actual future of the petrol price went up because of what? Because macroeconomics are suggesting that it is a very demanding product at the moment. You know, most of the Middle East countries do hold a lot of oil, and if something happens in there, like we did had Israel and Hamas as well, the Red Sea tension, it does impact the WTI, that is basically the petroleum. I think that's how you say petroleum prices do go up or do go down. All right, so there is lots of things happening, not only CPI, but CPI, it is a very important measure because the central banks look into it very, very much. Okay, so what I mean by that is when we have, you know, the Fed, for instance, that is from US, or RBA, that is from Australia, the Reserve Bank of Australia, RBNZ, Reserve Bank of New Zealand, ECB, European Central Bank, so on and so on. Every country has your own central bank that controls the monetary policy as well, the fiscal policy of the country. They do look into the core CPI and the CPI, especially now that you know, we are coming back from the sort of pandemic aspects, right? That we had a inflation to the roof, higher rates, higher unemployment figures, you know, people getting won't be able to paying the bills and getting off from the property. So that was basically disaster. Half a year since I used fundamentals. Okay, that's good. And how was the changing between you using only technicals and when you switch it to, you know, fundamentals? Did you notice a difference that you can understand the whole market a little bit better, or you think that there's no difference? Couple of years. That's good, Santi. That's nice. All right, pretty good. Okay, so just going ahead here, talking about CPI. And when we have the CPI, we always have a consensus, right? It's what the population, sorry, it's what the market is expecting. So in this case, we have year over year and we have month over month core CPI, as well as for normal CPI, not core. CPI and core CPI do have difference, okay? They do have a difference. I'm going to explain in a second. I just want to finish the explanation about the year over year and month over month. So if we look here, the consensus is at 3.7% from the previous 3.9% for the core CPI year over year. So basically 2023, right? Take 2023 into account. Let me open an image here, just a second. CPI USA 2023. There we go, this one. Okay. Not this one. Inflation, because I want the percentage and not the rate. Okay, good. So take this in consideration, all right? So this is 2023, basically from January to December, October, November, December. Okay. So we started January 2023 with 6.4% inflation on US. And right now we are at 3.4% inflation on US for December. Okay, this is 2023. So we're already now in February. And we do have the release of month over month, specifically January last month, how it would be the inflation, because inflation is just posted after the month finishes. Therefore, we're going to know how the inflation was on US in a few hours. But what they want to do here is they want to get from January 2023 to January 2024, closing up 12 months. They want to see how the inflation was on these 12 months. Was it higher than expected? Was it lower than expected? And what are the prediction that they, and what is the expectation, right? So if we look here, let me grab this. Oopsie, not this one. Let me close some tabs here. I only have one screen today, so that's a little bit of pain. The fundamental approach helped me a lot, and I can see the true and clear direction of a currency. That's really good. That's really good. Awesome. Hopefully it can help you a little bit more even. Right, so one more message. I'm following since last year. That has changed me a lot. A few fundamental trading improved me a lot. If I compare myself to the last year, I have significant improvement in my trading style. That's really good, Sensi. Congratulations. Lots, thousands. Fundamentals changed everything. That's true. Thank you. Thanks, guys. Thanks for sending through. Okay. So just talking about here. So the core CPI is expected to be 3.7%. Therefore, they're expecting from the previous year, from 2022 January to 2023 January, they're expecting a reduction of 0.2%. It is lower than the previous. So, you know, inflation is coming down. But what really matters, it's not the consensus, is the actual, what it will come. So the actual, we call it actual. So we have actual, consensus, and previous. So the consensus right now is at 3.7. If we have 3.7, this will be as expected, and the market will interpret as no change. So that's not going to have any, you know, high volatility momentum or changes, sudden changes on the US dollar, because we're talking here about the US. But if it comes higher than expected, this is, and that's what I'm expecting to happen, then because of, I do think we still have a little bit of inflation running around on US, hence since January, okay, and hence since December. So I do believe that we will have a little bit higher than expected on the CPI, not the core CPI. Core CPI may come as expected or a little bit lower, but the CPI, I will get there in a minute. I do think there is a potential to come higher than expected. So the consensus is at 3.7, and the month of a month, that is basically from January, just to January 2024. What I'm explaining is this. Okay, let me grab here. If we see here, there is year over year Jan. All right, and this one we have month over month Jan. So that means year over year from January 2023 to January 2024. And month over month means last month, January, specified, okay? And then we're going to have the CPI, only CPI, month over month Jan, expected to be 0.2%, and the previous was 0.3, expected to be 0.2%, and the previous was 0.3%. And the CPI year over year, January, is expected to have a huge decline from previous year. So that's very interesting. Right. So the core CPI and the CPI, they're pretty similar, but the core inflation measures the price of a selection of goods and services, but stripes out volatility prices such as the food and the energy price. Okay, and these categories are removed to create a more stable measure of underlying inflation trends. So this is basically the difference between core inflation and just inflation, right? Core CPI and CPI. CPI stands for Consumer Price Index, and PPI stands for Producer Price Index. So we do have both measures, one for the consumer and one for the producer. Okay, I hope that was clear. Now, when we look to CPI, that's the one that have most impact on the market because they usually come with higher numbers. Okay, so I'm thinking of a higher CPI month over month and probably a lower CPI year over year because most of the half of last year was declining inflation as we just saw it here. Okay, let me take this off. As we just saw here, we see that 1, 2, 3, 4, 5, 6 months pretty much dropping, and from 4.1 to 3%, that's a big drop, right? And then we had 3.2 and then 3.7 and it stayed same. So 1, 2, 2 months higher, and then 1, 2 again months higher. So basically 4 against 6. So 6 months declining inflation, 4 months sort of high inflation, and the rest 2 months was pretty much stable, sort of declining a little bit, only from 3.2 to 3.1. So that's a very, very slow decline, but still it is a decline. Therefore, I'm expecting, oopsie, there's some people joining. So therefore, I'm expecting it to be higher, okay, higher than expected. Now, we do have CPI for UK as well, okay, 4.1%, expecting to be higher than the previous. So if we look here, okay, we have pound CPI month over month, and we do have year over year as well, expecting to be 0.1% higher than the previous. So that's going to be very interesting. I do believe pound is, it's not on that bad situation at the moment in terms of inflation. They do still holding a very high rate, you know, and we did had some hawkish talkings about monetary policy from the Bank of England, and I do believe that they are done with hiking, but you know, we need to see how the inflation will come, so it will affect the pound prices. I will show this in a minute. Oopsie. Rolling down, we have the gross domestic product for Europe. That's going to be very important. Came in from negative quarter over quarter to just break even at 0%, and year over year Q4 coming a little bit higher at 0.1%. That's what the expectations are. Now, coming to Thursday, we're going to have GDP, very important. Okay, this is very important for the Japanese yen. Japanese yen is, I've posted an analysis. Okay, let me open up. Oopsie. Let me take this off. Let me open up my Telegram here. Okay, so if we look this one, I've posted an analysis. So if you're not on the Telegram group, please join us. I'm going to send the link here, and you guys can join us. I always send some good and fresh analysis there, so you can see here every day, most of the days I do post my analysis, and you know, reoccurring analysis that we've done on the webinar and on this meeting, and therefore, okay, so I've posted yesterday a full analysis, full breakdown of the US USD JPY. So have a look at these and you know, read it through, because it is a very cool analysis. I've spent a little bit of time researching and reading to the IMF, the International Monetary Fund, the staffs, all right. So that's the link here. If you want to have a look as well, you can just click the link. It's going to redirect you to the IMF. You can go to free download, and it have the full resource for you. It's going to basically be a 99 pages, if I'm not wrong. I've read it yesterday, so I'm pretty sure, yeah, 99 pages, talking about the Japanese yen and Japan economy. So That's a very, very big, I know, but this is what fundamental analysis is about, okay? Looking at macros. Of course, you don't need to read it because I've just, resumed everything for you here. And I'm bullish on, I'm bearish on Japanese yen and bullish on US dollar. Therefore, I'm looking to long positions on USD JPY. I'm going to go there in a few minutes, but just finishing here. The GDP will be very important because what basically is going on Japan is that they are on the NIRP, that's the negative interest rates policy, and they have the ICUC, that's the yield curve control, very bad at this moment, okay, because no one wants to invest in Japan. Therefore, the currency, it's not, it's not. Let's say it's worthless, because when you want to invest your money, you want to look for the higher yielding, right? You want to look for the best opportunities around G10 economies like US, Europe, UK, Australia, New Zealand, Canada, and Japan, and Swiss, and so on. So you want to look at these as, okay, this one is going to pay more, so of course I'm going to put my money there. Why would I put my money on something that it's not paying anything? So that's basically what's happening on Japan. Japan is not paying anything. Therefore, the currency, it's not been looking around. So that's a big problem, okay? Because if we look to the chart, just a quick one here, guys. Let me grab USD JPY. We can see that it's a very loss of strength. And suddenly they do have those spikes down. So what is happening? Okay, so maybe if you're not understanding what I'm talking about is on Forex, we have base and we have correlation, okay? So when I search for USD to Australian dollar, it's going to show me the rate conversion, okay? So if I get like Australian dollar to Zimbabwe dollar, it's going to show me the conversion, okay, and so on. So we always have a base. So in this case, it's the US dollar, and we do have a correlation that is correlating with the base. So it's always on the back. So if the base is stronger than the correlation, so in this case, we have a base on US dollar and a correlation on Japanese yen, what is most probably to happen is that the chart will go up, the price will move up, okay? And then when we have a lower, when we have a weaker Japanese yen, most probably that the price will go down, okay? Because Japanese yen is being more associated now than the US dollar, or US dollar is being more associated now than Japanese yen. So that's basically a very, very basic concept. You can search it up, or I can do a video explaining a little bit more if you guys want to, just put it on the chat. But if we look at here, right, on the daily chart, just so we can zoom out, look at how weak Japanese yen has been, all right, since 2020, 2021, even 2020, yeah, even 2020, we had this massive abruption here on the price, has dropped more than nearly 10% here on a few days, right? 15 days, most probably. Thursday, 6. Yeah, 16 days. So that's pretty impressive. Because Japanese yen has been weak, okay, and very weak. And this move here that happened on Friday on November last year, was pretty much, there is a correlation chart on my Forex book if it helps. Oh, that's good. I didn't know that. Most probably you're gonna have correlation chart Forex. Let me just close this. Oh yeah, there you go. Yeah, cool. Yeah, that's really good. That's really good. Oh, that they have a lot of currency, even commodities. I didn't know that. That's cool. That's good. Thanks, man. Thanks for sharing. So when we had this move here, was pretty much the board, the Bank of Japan, coming in and say we're gonna get out from the negative interest rates policy soon. Okay, what happened with investors? They started to protected themselves and getting off from those longs that they had and putting up some shorts. So we had outflow from Japanese government bonds and inflow to Japanese yen. All right, people buying Japanese yen. And what happened is USD CHF is flying. May I know why? Because CHF inflation. That there you have it. Swiss CPI came lower than expected. Yeah, that's pretty much it. Let me have a look on this. Yeah, what did I done? Look at this. See, I've mentioned about this uptrend. I get that in a second. Okay. So just finishing here, when we had this drop, was the board saying, okay, we're going to raise interest rates. Well, they didn't, all right? And this is what's happening. Japanese yen is turning weaker again. Therefore, I continue to be a long on USD JPY, even though if it breaks the 152 level, that is the highest spot since 2020, if I'm not wrong. Let me just, no, since October 2022. So basically similar. Let's call it the highest one since 2022. Okay, so 1 year higher. So very important here. If it breaks there, that's going to be very good for us, very good for my position. Now I do expect some pullbacks, like it's happening here, it's happening on these ones. I'm not saying it's going to shoot straight up, and this is not an investment advice, so do your own researches as well. I'm just presenting my ideas for you guys. So I do expect, it can sound a little bit crazy, but I do expect at 155 most probably. Only if Japanese yen, the Bank of Japan doesn't change the monetary policy, okay, and the NIRP, the negative interest rates policy, because if they do change, then investors will pretty much, continue to short US dollar and buy Japanese yen. So the demand to Japanese yen will be higher, therefore US dollar won't be worth much. Okay, hopefully it helps. And when we come here, what I have to explain all of this, because we need higher figures, we need a higher GDP, we need a higher CPI, so then they can know that the economy is actually walking through, walking to a positive inflation. Okay, so very important numbers in here. Pay attention on those. What else we have? Oh, definitely gross domestic product as well for pound. Okay, for UK, very important. We have as well something else. Philadelphia Fed Manufacturing Index, retail sales month of the month, January for US, very important as well, because retail sales does inform inflation. So if I see a higher inflation, most probably we're going to have a higher retail sales. It's not 100%, all right? I'm not saying this is a very good correlated sort of, releases, because CPI, it's completely different. I do use retail sales. I do use retail sales to predict the CPI, because if we have higher retail sales, then it generates more inflation in this economic that we're running at the moment. Okay, it's not always that. So I'm just want to try to do the opposite in thinking, okay, if we have high inflation, then we have positive retail sales. So let's have a look on retail sales as well and pay attention on that. What else we have? Oh, we have retail sales as well for UK. And then on Saturday, that's going to be Friday for most of you guys, we have PPI for US. We have some member daily speaks on the FOMC. And that would be it for this week. Okay, so we do have UK, Japan, US pretty big as well. So always the major currencies. The euro is very weak against the dollar than the pound in the current pullback that is happening. Sorry, the euro is very weak against the dollar than the pound in the current pullback. You meaning that the euro is weaker than the pound against the dollar? Between those two, the euro is the weakest. please just specify that for me. Okay, yeah, I do agree on that, and this is why I have bring up my euro dollar chart. Okay, so my target is at 107. All right. I thought, you know, I did expect a pullback here, so that was kind of right. And now what I'm looking to get in is euro Aussie dollar. Okay, euro Aussie dollar feels like a good trade for me at the moment. If we look at 15 minutes, it is on a nice resistance area. Okay, it is consolidating. It had tried to get through, it couldn't, so therefore I'm going to be looking to short this market here, euro Aussie. All right, euro just being very weak. All right, this was a pullback, and we had a pullback. So if you put Fibonacci here, there we have it, 61. Let me just short it on my phone here before I lose the entry. Just a second, guys. Euro Aussie. I'm just gonna short it here. Okay, there we go. Okay, cool. So if we look at the market here, right, in a sense of fundamental perspective, we have euro very weak. Okay, we have a very weak euro. Not much on the central bank side, I would say. But what is weakening euro is that two things, all right? First of all, that the central bank has pulled back a rate cut estimated. So the Fed has pulled back a rate cut estimated. Therefore, the money that we're going to Europe is now going to the US dollar. All right, so there's not much demand for euro at this scenario, and there's more demand for US dollar than the euro. The second is most probably we're going to have a lower GDP on the Europe side, okay, because we are not that good on employment as well as inflation wise, okay. So I do predicting a lower gross domestic product, and last but not least, the money supply is still very high. So this is all my analysis, you know, based on Europe. Now, when we look to these, we need to have okay, so euro is my weakest, okay? So why I'm buying Australian dollar and why I'm not buying euro? Because Australian dollar is stronger. Remember what I've said. If euro is stronger, if the base is stronger, on this case euro, then the market, the price would go up. If the base is, if the correlation is stronger, like Australian dollar, as I just mentioned, this is why I'm think that Australian dollar is stronger at the moment, then the price will go down. And I do believe on Australia because Australia has a big link with New Zealand. Okay, they're very, very partner. Let's say they're very big partners. Australia have only one thing that made me think of a possibility for a bullish move. And I actually, let me see, I think I've done a video on that. ACY. Videos. I've done a video on the beginning of the start of this month. Oh, there you go. This one. Okay. So if you want to have, the full aspect, please go and have a look on this video after we finish this meeting. So as we just mentioned, when we had the RBA last week, 2nd of February, sorry, not 2nd of February, that was last week. Yeah, that was last week. It was a little bit more hawkish than expected. Whoa. What do you mean hawkish? They've paused and they will continue to pause. Yes, they will continue to pause. But the big thing that is happening here is we have one thing that no one is mentioned about it. But if you read this statement that I've read it, and it's on the YouTube as well, what they've done is they post upon, like Fed did, okay? Because if we look to the Fed, FOMC, what have they done on the first meeting? Someone asked the question to Jerome Powell, what do you think about cutting rates in March? He said, no, that's too soon. It wasn't with these words, but representing the same thing. It's too soon, maybe a little bit low. We need to see inflation lower than it is at the moment, blah, blah, blah. And therefore, the market brings strength to the US dollar. And this is why we have US dollar index with this huge move up, and just because of that. But coming back to Euro Aussie, right? So when we have Australian dollar doing the same thing, what I'm predicting, the same thing will happen on Australian dollar, and Euro will stay weaker. Therefore, I'm longing Australian dollar and shorting Euro. Okay, this is my personal trade. So let me have a look on what I will do here. So 1 hour, my ATR right now is at 155, if I'm not wrong. Let me have a look. Yeah, 155. I've taught you guys how to do this. So I'm going to get 155 ATR times 6. That's going to be my stop loss, 930 points. Let me get here. 900 tickets, 930. Oopsie. 930. And at least 1.8 of my stop loss, that it's going to be 1,674. So that's my trade for now on Euro Aussie. Okay, same as Australian dollar. Okay, but here it's a good trade to hedge my risk on the outside of Euro Aussie. Okay, because if we look what is happening with US dollar, it's stronger. But on this case, US dollar is stronger than the Australian dollar. Therefore, I'm looking to short Australian dollar against US dollar. So I'm looking to buy Australian dollars and sell, buy US dollars and sell Australian dollar. Therefore, I'm not getting into this position, but this is my idea, right? Because we do have the same concept of Australia, but of course, US dollar is much stronger than Australia at this moment. Let me just close this, close this, close these, and these. Now, I've mentioned about gold last week. Okay, I've mentioned about gold last week. Let me get 15 minutes. So if we go to the Telegram, you can see my analysis for gold on here. Okay, how can I zoom in? Oh, there you go. Okay, so when the webinar was on, the price was here. Okay, the price was here. I've mentioned that we would have this decline, and then we would go up somewhere around these levels of Fibonacci levels, and we would go down until 2024. Oh, that's cool. 2024 price. I didn't pay attention. 2024. What just happened? Well, we hit it 2024, and we hit it even lower. We hit it 2014, 15. Okay, so very good trade there, a very nice approach. I do believe gold will continue to go lower. It ends just on a pullback here. And, you know, of course, if you go to the 1 hour, that is where I've building up this whole structure. Oopsie, sorry. Let me take this one off. We can see that we just broke that's not what I want. Zoom in. We've just broke these lows here. Okay, but we haven't broke those lows, so we still have these lows to break and these ones as well, so we can do a free fall, let's call it like this. But very nice, you know, downtrend. If we get the half here, we can see down, pull back, and then down, and now maybe a pullback somewhere here, and then a continuation down. Okay, This is not how the market will do. Of course, we may have some imperfections around the middle of this whole move, but have to leave great information as always. Thanks a lot. You good, Alex? Have a good one, mate. So when we have it here, right, this was the whole pullback. You can count on lower time frames like 15 minutes. You can count this as a whole pullback already, but this is going to be your top. All right, so if it breaks here, then it's an uptrend. But when we look to the 1 hour, then it's continuing to be a downtrend. Okay, when we look to the 4 hour, we are stuck on a consolidation range. Okay, so my whole thing here is that we may get very close to the 199. Okay, so that's this price here, 199, through the first quarter. So we still have another month and a half. So we are on 13th of February. We still have full March and 17 days of 17. I don't know which one. Yeah, probably 16 days of February yet. Okay. If US CPI come higher, then this will fulfill the movement. All right, we'll continue to fulfill the movement of a higher, a lower gold prices. If we look to WTI, that is what I was mentioned before, the gas prices, we are on a fairly big range. Okay, we are a very big range here from 78 to 70, all these $8. So I'm just going to wait to come back to 70 again, so then I can fill it up my car with cheap gas. Just joking. So here, basically what is happening on gold and as well Western Texas Intermediate crude oil, most known as WTI. What is the question here? gbpusd, please. Yep, I will go gbpusd. Just let's finish. I'll go euro dollar and pound dollar as well. Just finish crude oil first. 1 minute. You know, basically those commodity cycles are pretty much influenced by the tensions that is going on right now, still Israel and Hamas, and Red Sea tension, as well as interest rates decision by the central banks. Okay, so just pay attention on those things if you want to trade gold and crude oil, because they are very, very strong on this aspect at this moment. Okay, but my take is this will maintain a range. Okay, it will maintain on the 78, 72, 78, 72, between that, and then we'll see how it goes if it breaks to one side. But at the moment, trading in range, nothing too crazy. Let's talk about euro dollar and pound dollar to finish for today. Oh, euro dollar, I've talked about euro dollar already. Pound dollar, sorry. Okay, pound dollar, it is doing what I was expecting to be done. So let's go for the 1 hour. Very good retracement. Let me do zoom in. Let me lock this. Okay, it's locked. So a very good retracement here. You know, I told you guys I was expecting for a retracement. This is why I've closed half of my position on the first leg down. You know, we have to secure some profits as always as we get a chance. Therefore, I'm waiting for a little bit more higher. I do think that this will grab some attention. All right, this will definitely grab some attention on New York session today and London session today. Maybe pull a little bit up and then continuation down and breaking these lows, coming all the way down to 123. That it's my first quarter target. Not only me, but as well as Bank of America Securities. Okay. The only thing that can affect a lot this trade will be the GDP UK on this week that we've just looked at, as well as the retail sales, if I'm not wrong, retail sales for UK this week as well. Both of them have to come negative for this trade to continue to fall, for pound dollar continue to fall. If it comes positive, then what will happen is we need to reevaluate the situation and see if there is actually a positive instance and see how the previous was. If they maintained the previous as they were, or if they broke down even more, okay? Because I do remember they have some negative numbers there, and I do continue to believe that we will have some bad, you know, going through bad scenarios on UK. So just continuation down on here. We are consolidating, but continuation down most probably, okay? Anybody have any questions? I think I've covered up gold. I've covered up the whole economic calendar. Aussie dollar. I've talked about Aussie dollar, but I can talk this again. Where is it? Here. So my view on Aussie dollar is short. Okay, this is my view basically, because US dollar, I know that I'm long on Australian dollar and I know I'm long on US dollar. It doesn't make any sense. Okay. I can't long a pair because both of them are strong. One of them has to be weakest. And at this moment, Australian dollar is weaker than the US dollar. Same as someone mentioned earlier, right? Euro is weaker than the pound. Pound always does lag a little bit behind on the euro against the US dollar. Okay. And so same is happening here. Australian dollar, it is fairly consistent on the last couple months, I would say, with trading. But for now, the US dollar has regained an attention because we did have a FOMC, and it's much more incisive. I would call it incisive, yeah. A little bit more, how can I say that? More front forward in terms of they will actually post upon the rate cuts. As of Australia, we don't have much clearly understanding yet. So Australian dollar, it is strong against a weaker currency like euro. This is why, oopsie, this is why I'm looking to short euro Aussie. Okay, but it's very weaker against US dollar. All right, and this does make a good hedge of this trade, because if we get short on Australian dollar and short on Euro Aussie, it's not going to make sense because I'm shorting Australian dollar and I'm longing Australian dollar as well. We call this hedge. Okay, so hedge serves as a protection mechanism to not get too much losses on our way, because the most worst case scenario is that you get those positions on a break-even point. All right, this is very superficial explanation, but this is sort of what happens. All right, did I answer your question? So let's have a look on US dollar. US dollar, we were positive since until 9th of February, January this year. And then on 16th of February, 1 week later, we did have a change from positive to negative. That's kind of interesting there. Then we have Canadian dollar on a negative, nothing changed. Well, just more short positions, I guess, and long few closed, 6 closed long positions and added of 7 short positions. So basically, from the long, they added to the short. Japanese yen, not much change. New Zealand dollar, only 2.3% change, not much here. CHF negative. That's interesting. So we do have a negative CHF. So therefore, we may have a weaker CHF this week. Okay, we had a flip from positive to negative. Europe, no, ooh, la la, that's interesting. Okay. So we do have, finally, we have a flip to negative since 1st, 2nd of January. Wait a minute, this is wrong. Yeah, that's correct. We do have a negative flip here. So maybe we are actually going even further down on euro dollar this week and next week, and you know, until we have the next data. Just coming back here to euro dollar, let me refresh my charts because I didn't get my analysis. Euro dollar. What's happening here? Why my analysis are not here? Don't know why. Interesting. Anyways, so I do believe a continuation down on euro, especially because we do have a lower, we have a flip to the negative, and for the US dollar, again, just US dollar here again. We have some addition on long positions, so from 26 to 34 long positions, and we have some closed short positions from 26 to 22. So therefore, you know, they basically closing shorts and aggregating these on longs. That's pretty much what they're doing. Therefore, you know, therefore euro dollar, the most probable scenario is continuation going down. Now pound dollar is pound is still at 15.9, so not that there is a change, but not much change on the percentage, but a very big increase, actually 8 more long positions. That's interesting. This is why the pound dollar is kind of resilient at this moment to not fall sharply. Okay, so this is pretty much it, guys, from the big ones. So I hope I helped everyone. I hoped BART chart has a simple to understand version on quote, if that helps. Okay, I didn't know about that. You do have some good websites on your sleeve, man. Let's have a look at that. BART chart. Means of traders. Metals, soft, US dollar index. Oh, there we go. Yeah. US dollar index. Close this. Okay, that's a different one. Okay. Yeah, I still prefer this one, in my opinion, just my honest one, because I can actually see the long and short positions. On this one, you sort of can't. Well, that's a good one as well. That's pretty good. I can do the same here. I can change my I can change as exactly the same. I can put on line chart. As well. Pretty good. Yeah. All right. That's all from me today. Hope they helped. Very good to merci Matthew. Merci, man. Thank you. All right, guys, have a good week ahead, and I see you back on Thursday. See you, everyone. Bye-bye.